This conference will now be recorded.
So that's the compliance warning. So everything you say now can be used against you, Eden. Hi, everybody. My name is Darren Coleman. I'm a Senior Vice President and Portfolio Manager with Raymond James in Toronto. Welcome to the next edition of What Room Are You In? Because I think with all these remote access videos, and I've seen, fortunately, Eden, you've got yours set up nicely. I'm not looking at a light fixture. I've watched all these CNN and CNBC interviews with people that are filming in their kid's bedroom. This is my home office. No, it's not. I actually snuck into the office in Toronto today because there's literally no one here. So I'm practicing my safe social distancing. I trust you've been doing things like that too.
Yes, I have, unfortunately.
I've been following the Canadian protocol of one good poke check, one hockey stick. That seems to be the correct distance. That's the Canadian measurement for all of our American viewers. I wanted to just kind of pivot to business now. Thank you very much for taking some time to join me. You and I have known each other for over a decade. And I just to set it up for the viewers as to kind of where you've been, what you've done professionally. So you're probably one of Canada's, in my estimation anyway, one of Canada's most experienced biotech investors. You've run mandates for RBC funds back in the 90s, and from like 93 to 2005, something like that. For a long time, you ran biotech mandates for RBC mutual funds, so you're probably one of the most experienced investors doing that. You ran covered call strategies for Horizons ETFs. You kind of invented those. We still use them. So thank you for building those tools for us. And now you're at Next Edge Capital, where again you're kind of back to your core strength, which is in biotech. And what a time to be doing this. So I wanted to talk today because one of the beliefs that we have about or principles about managing money is you want to follow the money, go where people are allocating capital. And so a couple of things. There's this coronavirus. You might be aware of it right now. Yeah, so I'll share some detail with you when we're done, so you know. So a couple things, because a lot of people are wondering, is there a vaccine coming? Is there treatment? Like, what do we look at it from that perspective? And then I want to pivot to, as investors, how do we think about that? How do we allocate to that space? Because again, money's clearly going to flow there. So what do we do? So why don't I kind of step back and say, like, from as a biotech investor, how should we be looking at the industry to kind of help us through this situation that we're all in right now around the world?
Yeah. Well, you know, we are in an extraordinary period right now. So when we've had wars, we turn to the military. When we've had financial crises, we turn to the Fed. Now we have a biological crisis, so we turn to biotech. And quite frankly, as pessimistic as it feels right now with the escalation of the pandemic, the good news for us and for everyone globally is that this pandemic is on a head-on collision course with biotechnology. And I'm betting that biotechnology wins the day. And we have tools, we have solutions. We figured out so much in such a short period of time that there is considerable reason for optimism. And we've we've seen biotech tackle things that were previously untreatable and incurable, and arrested them, subdued them, and even brought cures to things that seemed inconceivable 10, 15 years ago. So we are in an extraordinary age where biotechnology will make a difference to humanity.
By the way, I should have put a disclaimer, a little trigger warning on here for any anti-vaxxers that they should maybe go read a textbook or something like that. But I think you're right, you know, and that's what I think makes this situation very different from when we talk about the Spanish flu of 100 plus years ago. They didn't have the technology back then that we have today to communicate ideas, to do the social distancing, but then the tech to actually begin finding a solution that can save all of us, right?
That's absolutely. Yeah, you know, how quickly we've actually escalated from a completely novel virus to having someone like Gilead repurpose remdesivir to.
That's that anti-malarial drug that I'm hearing about. Is that the right one?
Anti-malarial drug is hydroxychloroquine.
Okay.
That's a repurposed one. But remdesivir is sort of the frontline antiviral drug that Gilead engineered for the Ebola virus. And so once you've already contracted the virus and you are in stage 1, this antiviral developed by Gilead, which, again, to show you how extraordinary and humanitarian these companies can be, despite the fact of the political rhetoric that often attacks them. Gilead has requested the FDA rescind its orphan drug status, which gives it absolute exclusivity to manufacture and distribute this drug. It rescinded that so that any manufacturer, any global entity, even though it controls all the patents, has orphan drug, can reproduce that drug for first-line treatment. And there will be no commercial benefit to Gilead from this, from millions of people being treated with it.
But so that's actually interesting. So, because I think some people have criticized the pharmaceutical industry in the past that, they come up for a cure, they want to profit first and not share it with anybody. But that doesn't seem to be the situation now, just from that perspective, right?
Exactly. And again, it's unfortunate that misnomer exists. But, for instance, the Ebola virus, the Ebola virus, that was actually developed by Canadians at the National Microbiology Laboratories in Winnipeg. It was actually developed by Canadians. Merck commercialized, but by commercializing, it means that Merck developed it in scalable quantities and made it available at cost.
I see. Okay.
They didn't profit from it, right?
That's
so,
interesting.
yeah.
And that's, I think, we'll pivot to investors in a minute, but I think that's important to realize that just because somebody come up with a cure doesn't mean that's suddenly going to generate massive amounts of profits for them, right?
That's right.
So we have to be thoughtful about that. But I want to just focus for a second on, even though we're hopeful and optimistic that biotech can really provide a solution to this, I think for people to be thinking correctly about time frames, this isn't going to come by next Thursday. Right? How fast can some of these solutions potentially come out? Because we're not all going to get our summer vacation plans now. That's probably a little too soon.
No. So and there's two ways to look at it. So you've already succumbed to corona, so you need an antiviral, and that's what remdesivir addresses. You've already succumbed to it, and the virus is replicating in your body. It inhibits that replication. That's one way of looking at it. But that's for the small percentage of patients that actually require hospitalization as a result of contracting this. Now, the bigger issue is for a vaccination, which is something that's preemptive, that is safe, that every one of us can take without it having any effect, but yet at the same time, highly specific, that should you succumb to it, your body has already developed immunity as a result of the vaccine. That is not a 2020 solution. That's a 2021 solution. So in the meantime,
we're still going to have to work through this pandemic and all the social distancing and the remote. That's still got to keep going on. There's no magic pill or needle that's going to come in the next few weeks so we can all go to church and sit next to each other as Donald Trump thinks we're all going to do in 2 weeks. That's not happening.
Biological testing takes time.
Okay.
For it to be proven safe and effective, it takes time. There's no getting around that.
Right. But the good news is there is a solution. It's just not going to be by next Thursday.
That's right.
Okay.
Yeah.
So that's helpful to know.
First line solution, but not a vaccination.
So let me just pivot a little bit, because you and I talked last week, and I think Trump may have been listening to some of our conversation, because and I've seen some of this get repeated in the press, because at the moment we're all in this horizontal lockdown, like everything shuts down, everybody stay away from everybody, contain the virus. But is there a logic, or is there a timeline when you think that we start to pivot from instead of a broad-based shutdown, we start moving to a more risk-managed approach, and we talk about, because I hear them talk about vertical shutdown, like in other words, find the risk factors based on the evidence of what are actually the things that are causing the greatest risk, or where are the people at highest risk. Maybe it's an age cohort, or it's pre-existing conditions or things like that. And then once we know what those risk factors are, maybe instead of everybody being quarantined and locked down, we just make sure we identify the people in the highest risk groups, make sure that they're safe. But then the rest of us that are in lower or much lower risk, we can take precautions, but we can kind of get back to work a little bit and get back to kind of what it used to look like. I'm hearing that argument. Does that make sense based on your experience in medicine and biotechnology? Is that a logical thing that you think we could be moving towards?
Absolutely. And the limiting factor, so you look at the South Korean model. The South Koreans tested aggressively.
Okay.
They tested the actual test of the virus. They tested temperature aggressively, and so you could be easily it can be easily determined whether or not you're a risk factor at that point. At the moment and at the instant that you become a risk factor, you quarantine yourself.
Okay.
But they keep the restaurants open, and certain services and so on, they remain functional in that respect. So I think we will gravitate to that, and it's vitally important that we get access to point of care tests that is readily accessible and can provide answers in a very short period of time, instead of having a more detailed PCR-driven test sent back to the CDC sites, approved sites, things like that. So, and we're seeing a plethora of companies come up with tests.
Okay, I was going to ask you that, is what's that looking? Because we are hearing about access to tests is tricky, but clearly the industry, can respond very quickly to a company saying, we have a test. So you're already seeing that starting to happen, right?
Absolutely. And you're seeing Roche began shipping its tests this week. Qiagen began shipping its tests this week. There are others that are in the late stages. They're getting emergency medical use approval from the FDA, so they'll get those out. So I think you're going to see that over the next few weeks. And that is an enabling factor that allows society to migrate out of full quarantine into at least a minimally functioning economy, which is important. Important from the market standpoint. The market has to be able, I think one of the reasons it's stabilizing right now to a degree is that we're migrating from the unknown unknowns to the known unknowns. And once the market can look out 2 or 3 months and see where there is potentially a turn, that's when it begins to stabilize. And it moves from a sell first, figure out later. So that's where I think we're in that phase right now.
Yeah, because there isn't enough government money to replace the private sector. Like, that just can't happen. And I keep making the argument that for the vast majority of people, at least in the West, this is going to probably be at least first an economic challenge for them, a financial challenge for them, more so than a health issue for the majority of people. So we have to kind of manage both of those things. So here's another question that I've had someone ask me, and it's around. They know I'm probably the only person in the building, so my lights are going on and off as they go, oh, someone's still here. The whole issue around ventilators, because if you listen to Governor Cuomo, he's losing his mind because he needs 30,000 and he has like 6 or something like that. One thing I'm curious about is many of us now have these sleep apnea machines. You go to any airport, that's not a laptop, that's the sleep apnea mask thing. Can companies like ResMed and Philips that are in that, can they start repurposing those machines or adapting them? Or is that just not even the same type of equipment?
No, that's a terrific question, and you're spot on. Listen, today, news came out that Dyson has found ways to repurpose vacuums and turn it into ventilators.
Okay, we have a Dyson at home. That might be a bit aggressive.
I'll try to get the blueprints for you.
Powerful.
I'll get the blueprints for you.
Okay.
And,
I'll just play in the garage. Okay, honey, try this.
And the NHS has ordered 10,000 units. So the resourcefulness is happening all the time, and I'm reading countless stories every day where companies are repurposing instruments for that, and it's fantastic. So yes, and that's another enabling factor.
Okay, that's very good. And we've been investors in ResMed for a while, so I'm very happy but I might put Pedro, write down Dyson. Pedro, he's not here. We're going to look at Dyson. But I think this is actually very positive news, because if we just kind of take the tsunami of information that's coming to us from the regular media, it's very frightening.
Yeah, well, Darren, never sell human ingenuity short.
Great point. Great point. Now, I want to pivot a little bit about this whole idea about humans and how we react. Because one thing I know about you, because you and I have known each other for over a decade, I know that you have a hobby that's quite interesting, and it's not trick water skiing, although that would have been most people's first guess. You are a market historian. You have an incredible collection of news articles and material from previous market crashes like 1929, and you probably have a Dutch tulip from 1700 kicking around somewhere. I wouldn't be surprised. And so you've studied how markets move, how people react, panic, the decisions they make. So I want to pivot from the biotech, the medical thing, to what insights would you bring to investors about how they handle a crisis? Because, the one thing we all learn from history is that we don't learn from history.
Right.
And Mark Twain once said, history doesn't repeat itself, but it sure does rhyme. So as people are going through this, not just incredible health scare, but, they're going, oh my God, is it 2008 all over again? And where did a third of my money go? How should they be responding? Our clients have had tremendous discipline. I'm so proud of them. What messages would you share with people based on the things that you studied?
Well, first of all, to your point, behind me is the original London postboy from the top of the South Sea bubble in 1720.
Wow.
So, yeah. So this is 300 years old. And it was the same top of the South Sea bubble that caused Sir Isaac Newton to say at the time, the orbiting of celestial bodies, I can understand. The madness of crowds, I cannot. And
That's a great reminder to have, right?
Yeah. But so to your point, to help my investors and help them help their investors, I prepared this 200-year look back at every financial panic. I looked at every bear market, but I really focused on where phases that were in panic, where it sell first, figure out later, and there were greater than 30%. And for every episode, there is a different cause, but the reactions are very similar.
Yeah, they are, aren't they?
Yes. And so
it's always unprecedented. It's always this time it's different. And the cause or the data might be, or the thing that triggered it might be new and different, but the pattern, it's almost like weather, just kind of repeats. We can see what's likely to happen next, right? There's so much we can learn from that.
Yes, and because the stock market is a discounting mechanism, it moves in advance of events. When it looks forward 6 months or a year, it moves forward in advance and it hits uncertainty. So it sells first and it will figure it out later. And then we reach a clearing price. And in all cases, it's a clearing price. What turns, and there are many of these, there are probably 15 of these in the past 200 years.
I think I've lived through 5 of them now, personally. And I'm only 30. No.
Yeah, that reminds me, I wish I still had my Huey Lewis here. So we see similar magnitudes of sell-offs and speed and intensity and price. And like you said, every single time we think this one is really special. It's really worse than all the rest of them.
Right.
I think that and I've been asked repeatedly, is this 1929 again? Is the 2008 crisis again? You knew me back in 2007. You knew how bearish I was.
Absolutely.
I said we were going to have the structural bear market of our generation, right in front of that. There were causal factors that caused me, and I isolated it down to mortgage insurers and mortgage companies.
I just met you. I thought you were kind of half crazy. I was right, but I didn't know you were still right too.
That is funny.
I'm not editing this out, by the way. This is staying in for everyone.
And so there were causal factors that wheels were in motion to cause an event like that.
Yes.
In 1929, we had the crash. It was very euphoric. The market was very thin. We had a crash. That turned into a depression because of a series of 3 policy errors, right? So in 1930, so the market crashed about 48% in 3 months.
We have that event, and then it's the what happens next that's very important.
Exactly right. So so the market recovered 50% of that decline over the next 5 months between the November 13th low and the April 14th high in 1930. Then the Fed was concerned about the recovery in the market. And so they started to raise interest rates, withdraw money supply from the bank reserves. And then that was compounded by the institution of the Smoot-Hawley trade war, which now meant Europe started to repatriate investments in the States. So you had 3 things coalesce to really break the American economy.
Yeah, and just to sum it up for people that don't know Smoot-Hawley, it basically money just disappeared. There's just no liquidity. There's just no money to circulate through an economy. It's like the oil came out of the engine.
That's right, exactly right. And so it took the flooring out of the economy, and you ended up with that long depression market.
Yes.
We learned a lot from that, right? We've learned a
Right.
lot. Now we go to the 2008 crisis. One of the reasons I was so bearish on it, because of course we had the leverage in the system, and then once one thing breaks, there's a domino effect. And so in 2008, we saw a plethora of big institutions fail: Freddie and Fannie, AIG, Wachovia, Bear Stearns.
Yeah, the whole financial system basically was very, very ill. And it
Yes.
needed to all be fixed,
Yes.
right? So that was a massive structural problem we had.
That's right. All the conduits of credit to the economy froze,
Yes.
right? Because shareholders were getting wiped out. Now we get to Lehman, the Lehman moment, and why this is significant versus where we are right now. So going into the 2008 crisis, Bernanke had studied the Great Depression well, didn't want to repeat the mistakes. Then comes the Lehman moment. They had rescued Bear Stearns at the end of February of 2008. They didn't want to be seen as rescuing another one. So
Right.
when Lehman got tapped out of the repo window,
Yep.
right? Lehman was able to access credit at the repo window in mid-September of 2008. That crisis could have been brought to a floor at near those levels instead of turning into an all-out crash.
Right. They just let them go.
Exactly right. When all they needed was credit to carry them through, where mark-to-market's not an issue to bring you down, but credit can bridge that gap, just like post-87 crash. After
Right.
the 87 crash, Greenspan extended credit to all the Wall Street market making firms because they were technically insolvent.
Yes.
But that credit allowed them to get through, and everything recovered.
So fast forward to today, and that's why you're seeing all this money come so fast, right?
Absolutely. And most importantly, you saw 2 weeks ago, the Fed dramatically increased its repo funding.
Right.
In repo
This
market,
is the behind the scenes stuff that most people wouldn't be aware of, that this is to make sure the machine in the background keeps functioning, right?
100%. And then, so what you do is you stem failures that ordinarily could be avoided with that conduit of credit to carry it through, right? And that's what, and again, that's a lesson learned from '08.
Right.
So I think, and then the other thing is, in '08, we didn't really have a fiscal stimulus. TARP was really directed at, financial companies.
Yeah, it wasn't going out to the public. It was designed to keep the banks afloat because that's what was sick. Today, we have the economy shutting down because everyone's told to stay at home and stay one hockey stick away from everybody, which is a different thing. So now the stimulus has to go to the individuals, to the businesses, and to the people to keep that part afloat until things can get back, right?
That's correct. And you remember the first time TARP was voted on, it was actually rejected and the market crashed. The Dow was down 700 or 800 or 900 points that day. And that kicked off the crash. Again, you're seeing this week the exact opposite, right? Bipartisan support. They get this $2 trillion bill through very quickly. They're, as I described in my report, they're audibling at the line of scrimmage. That's what's going on, and that's what you need to do.
And it sounds also, sorry to interrupt, but it sounds also that not only are they bringing all the money, they've also really telegraphed to the market that we'll keep doing this. This isn't going to stop. We're not going to do one and done. We're just going to keep printing money. We got platinum. We'll make a coin that's worth $1 gazillion, and now it gives us like the whole way money's created is fascinating for people that want it. We won't go into that today, but money is basically almost like a theoretical construct, right? It's not tied to anything. So they can just create more money when they need to. In the United States in particular.
Absolutely. And the states have done that to a lesser degree than other countries have. The way Japan has been in trouble for a while, 20 plus years and so on. So they have the latitude, and being a reserve currency, they've got that flexibility. So you see them just take unprecedented measures, and the US dollar is just down a bit. It's given back a bit of the rally that it's had for a while, because I think they know, the markets know the prudence with which I think they manage and why it's so highly targeted. It's a bridging measure. Right. It's not profligate spending. It's a bridging measure.
Right. And I think people understand that. And it's interesting because I think for many investors, one of the challenges is the 2008 experience is still in the back of their brain and it's
Absolutely.
creating some stress. But the
Yeah,
good part of that is for all the policymakers, they remember that too.
absolutely.
Right. So that's
Yeah,
why we're seeing this happen as rapidly and pretty much as coordinated as it's happening. Right.
that's
So
exactly
that
right.
that gives us some optimism. Okay. Eden, I'm going to wrap it up there. We've had about a half hour together. Amazing how fast time flies.
Yes.
I'm going to thank you for that. As this thing continues and we all run out of shows on Netflix to watch, we might be back for another conversation at some point in the future. But I wanted to thank you today. Very generous with your time. I think I'm lined up between the Globe and Mail and BNN to talk to you because you're a popular guy right now, and I'm not surprised. But thank you very much. You've always been a great friend to me and a great investor for us to partner with. And I think from the biotech space, I'm not going to go and try and pick the companies. I can't even pronounce half of what they do, so I'm not going to try that. But I think the work that you do some of our clients might find a way to invest with you shortly. So I can't say more than that. The regulators watch. But thank you very much for your time. And I want to thank all of you for taking some time to watch us today. So thank you very much. Eden, have a great day. Keep your distance. Wash your hands.
Darren, I am delighted to chat with you again. It's always fun. Your charisma, your insight, I really do appreciate it. It's always a delight. Thank you for having me.
Well, for sure. And I'll give you that $10 when I see you next time for that compliment. So thank you very much, Eden. Thank you all for watching. We'll see you again.
Take care. Bye-bye.